Hi guys, how are you? Welcome back to Real Macroeconomics and Investing. Welcome to TradingView, YouTube, and my subscribers. How you guys doing? Welcome. Let's get started. So, what a week, huh? Yeah, yeah. Don't pick bottoms. What happens is typically is that people get very excited when there's price action and there's movement and volatility. They get really excited, and they should do actually the opposite: is not get excited and just kind of run away from stocks and all asset classes when they start to tumble because you don't that this is not the time to be making money. The time to be making money is when you are uh, in a nice calm market that is boring. Okay, boring is good. Boring is when you make money. Okay. um, I wouldn't call this boring, although it's okay, but I'm talking about something like this where no one is looking. Nobody's even talking about it. The Dow Jones Industrial Average climbed 0.34% today. Right? That's the kind of boring I'm talking about. I've seen a lot of people call bottoms. Um, you know, uh, it's don't pay attention to these things. It's just people trying to get attention. They're just randomly guessing. I do get the whole part that for the past 11, 12 years, buy the dip, buy the dip, buy the dip. Has worked out for them, and that's great, but that's not the way it is always. And if you've seen some of these moves, they're not little, okay? They're not little moves, they're very big moves. I want to talk a little bit about shorting, okay? Shorting is not the opposite of buying. To be a short, you have to be the best of the best of the top, the elite of elite sniper. What do I mean by that? And even then, you're only going to be marginally profitable. You got to have a lot of time in the seat. You got to know exactly what you're doing, and you got to short when no one else is looking. What does that mean? Well, when everybody else is sitting here telling you, buy the dip, man, come on, we're partying. Yeah, buy the dip. You're like, yeah, you buy the dip. I'm going to do my thing over here. I'm going to short, right? It's a whole new different ball game. You got to think completely different. You got to see something that no one else is seeing, and you have to be prepared to be wrong often, often, because everybody is against you. Government is against you. Fed is against you. Pension funds are against you. Everyone who has a 401k is against you. Everybody hates the shorts. And that's why there's such a small, small percentage of the overall market. Um, so let me give you an example. Let's say you have $10,000, you find a $10 stock, you short it. Goes down 50%, you make $5,000. Good job. Now it goes down another 50% from there. Now you only made $2,500. Goes 50% down from there. Now you've only made $1,250. You see how that works? The more you're right, the less you are rewarded. That's that's not the same thing as buying. Okay? Imagine being right, and the more you're right, the less you're rewarded. So why does that happen? Well, it happens because no matter where the price is, it could go up to a gazillion, 10 gazillion dollars, doesn't matter. You're always 100% from zero. So that means the most you can make is 100%. You're never going to make more than 100. Buying, on the other hand, you can make 10, 20, 50, 100, 200, 500, 1,000, 2,000%. The more you're right, the more you are rewarded, right? So shorting is not the opposite of buying. Remember that. It gets a little bit more complicated when you start using, leverage and so forth. And yeah, okay, but you also get blown out much, much faster. You really have to see what others don't, and you really have to be prepared to be wrong often. So remember, shorting is not the opposite of buying, and you're not going to make money in volatile markets. You're going to make money in boring markets. Let me show you what I mean. Who was thinking back on December 14th to short momentum stocks, right? Nobody. They were all thinking about the Santa Claus rally, and yet this is what happened. A firm, okay? No one was thinking back on December 15th, hey, we got to go out and short. Nope, that's what happened. Apple, well, it's a cash cow. What are you doing? Yeah, they're right. It's a great company, a lot of cash, right? Cash cow, make a lot of money. You're not gonna have a you're not gonna have a very long career if you're sitting here trying to short Apple and other good names. But in the end of the day, a structure is a structure, and a stock is a stock, and they always do correct. I even say it in the comments. Admittedly, this is this trading view suicide. There's a saying that we have for pilots. There's old pilots and there's bold pilots, but there's no old bold pilots. Yeah, that's true. Same thing for trading, right? Remember, it's a marathon. It's not a sprint. Don't try to be bold. Okay, try to be old trader. CRM, great company. Okay, December 18th. Boom. Uh, and this is what I'm saying. You have to do it when no one is looking. What's Korea have to do with Apple and CRM? Nothing. Nothing. And yet, boom, there you go. From failed moves comes fast moves in the opposite direction. That's a failed move. Okay. Um, I'm not even going to talk about GameStop. You can forget about that. Shiba failing again. Yeah, it failed all right. Um, Solana was supposed to be the next hottest, greatest thing in cryptos, and well, even that fell apart. What does Solana have to do with Korea or Apple? Nothing. Nothing. And yet they're all selling. Why? Because that's the message of the markets. You got to listen to the message of the markets. You got to understand economics. You got to understand uh, how people are thinking. And if you can see it before anybody else can, and you're good enough, and you're right, because you'll be wrong a lot of times, okay, and you're right, things are going to go your way, and that's just the way it is. Okay, China. Okay. Boom, there you go. Uh, S&P 500 inflation adjusted has never broken this 50-year channel, and yet here we are. It's broken and continues to be broken, by the way. Um, A firm we talked about. Gold is dead money. Yeah, it's dead money. Believe me, when gold breaks out, there's not going to be a discussion about it. Okay, but I keep seeing people having this discussion. Ultimately, I think it does break out. I think that, but until it does, it's dead money. Don't even touch it. All right. Junk bonds. How are they going? Yeah, exactly. Right. Message of the market. Uh, ARK. No one remembers this from a year ago, almost to the day, January 26, 2021, a year ago, in a couple days, right? I said, this is bubblicious. Done. This is bubblicious. And here we are, a year later, and look what's happening. So that's what I mean. You got to short where no one else is shorting. No one else is even paying attention to you, right? Everybody's doing their thing over there. But again, it's important that eventually they all have to agree with you. If they don't, you're wrong. You're wrong. Um, and that's why I posted this. Oh, it's different this time. Yeah, you gotta be careful. You have to take this under consideration that you can end up with an Eiffel Tower. Not saying it will, but you should have a healthy dose of fear that it can. This way you make better decisions. PayPal. Okay. Well, there you go. Great company, but still a stock. JetBlue Airlines. Somebody's telling me, "Oh, you don't understand airlines." I'm an airline captain, my friend. I understand airlines. I've been in them for 25 years. Um, doesn't matter, right? It goes lower. Carnival. But the travel industry is great. You don't understand. Well, maybe you don't understand. I do. What else? Infrastructure. Kind of hard to print up more money when you have an inflation problem. That broke, and down we go. U.S. dollar versus the Russian ruble. Okay, breakout. Well, pushing higher. Okay, Neil. No one was thinking about shorting this thing back on December 3rd, and yet here we are. So again, just gonna emphasize, shorting is oof. It's a funky thing. You got to do it when no one is looking, then you got to wait, and then you got to hope that everybody else agrees with you. Because if you don't, you're wrong. And even when you're right, the more you're right, the less you're compensated. That's not a recipe for great success over the long term. But it is a useful tool. No one can deny that. Okay. Um, but I just need people to understand the difference. So I hope this video helped you. Uh, don't pick bottoms. Don't be bold. Be old. Be boring. And I promise you, over the course of time, you're going to do really, really good. So thank you very much. I tried to make this video a couple times, more than a couple times. For 5 days, I've been trying, but unfortunately, every time I do it, uh, it doesn't upload. I don't know what the problem is. Maybe it's a hotel, maybe not. I don't know what the problem is. Again, thank you to TradingView. Super nice to post my video. I hope it helped a lot of people. I got a lot of comments that they were happy uh, that I made them aware of it, that they avoided some losses. Um, so thank you for all the new followers. I'm going to work hard always to produce the best content I can't. I can. I can't. I can. Um, and yep. Any questions? Just message me. I'll be more than happy to answer. I'm a little bit behind, but I will catch up. All right. So thank you again. Take care, guys. Bye bye.